Hi everybody, welcome to today's webinar presentation, which we've entitled The 3 Essential Tools for Business Success. My name's Chris East, Director here at East Partners, and I'm going to be presenting today, and provided the technology is going to be my friend, everything should run nice and smoothly. Now, if you've done one of these webinar sessions before, you know that I like to start with a thought for the day. And today's comes from The Rock. So if you're a rock fan, you might have heard this quote before. And it's simply this: success isn't overnight. It's when every day you get up a little better than the day before. It all adds up. So what are we saying here? Essentially, there's no magic bullet for business success. It takes hard work. But utilizing the tools that you have at your disposal can drive hugely rewarding improvements. So it's not about making drastic changes. It's about making small incremental changes day by day, changing old habits to get a little bit better as we all go forward. All right, so before we get stuck in, I'm just going to throw to our usual disclaimer, which is essentially this: that the information in this educational webinar is just that. It's educational, it's general in nature, and is no substitute for tailored, specific advice, which is relevant to your circumstances. So with that in mind, let's have a look at what we're going to talk about today. We're going to talk about the power of 1%, which is linked back to our opening quote. We're going to have a look at having the courage to change. Humans innately do not like change. I certainly can relate to that. But we need to have the courage to recognize that we do need to change if we want to have improvement. We'll then delve in depth into what these 3 essential steps are. Then we'll look at what the next steps are. In terms of Q&A, raise them throughout. Don't leave them to the end, raise them as we go. If you're listening to this on the recording, of course, please get in touch with any questions you might have about today's presentation. Okay, so let's have a look at the power of 1 to start off with. Essentially, this is what we're talking about here, is how small changes can add up over time. And like I said, change isn't easy, so we need to have the courage to be able to change. So when we look at this, what do we really mean when we say small changes add up? If you improve by just 1% each day, after a year, you'd have a massive 37.8 times improvement. You would be 37.8 times better off. So for example, if you were to increase your sales by 1% every day, year on year, every day for 1 year, by the end of that year, you'd be selling 37.8 times more every day. What would your business look like if you were able to have had your sales increased by 37 times? Let's assume that we're farmers. If I've got some farmers online, fabulous. But for everyone else, let's assume that we're all farmers. Think about what your business could look like if you could lift production by 1% consistently. Or alternatively, if you could reduce your costs by 1% continuously. So what the formula demonstrates is the long-term benefits of continuous improvement. So for a farmer, that's enormous. Financial dividends on that are huge. And just as it is in any other business. But let's be realistic on this. It's unlikely that you'll achieve 1% growth in sales or a 1% reduction in costs every day. The point, though, is to illustrate that the power that we have behind this is the power of compounding. Even if you were to achieve a 1% improvement each day, you will have double in just over 16 months. We're simply looking to achieve continuous, sustained improvement. So now let's consider what happens if you don't make these changes. Let's say your competitors sharpen their game, or you fail to keep track of changes in technology, or you manage your team ineffectively because you're just so busy and your sales start to reduce by 1% each day. So if your sales, let's say your daily sales are currently $1,000 and your sales regress by 1% every day, your sales will be just over $30 by the end of the year. So again, using our farmer example, what happens if your efficiency decreases by 1% per day or your costs are left unchecked? Again, sales production, it's unlikely to drop in a linear way like we've illustrated here on the screen. But the important point is that unless you make continuous improvement, your business is likely to drop over time. And as Einstein said, compounding is the greatest mathematical discovery of all time. And from my perspective, he should know. So now we're looking and saying, if we're going to get that continued improvement, we need to change. And I think we can all agree that change is inevitable. But change, like I said in my opening remarks, change isn't easy. Think about other businesses that haven't adapted to change and what the impact has been on them. So if I move to my next slide, here's an example. Kodak was the poster child for companies who failed to act or react to their changing market. If we go back to 1976, Kodak claimed a market share of 85%. Enormous, a huge, huge company. But as we all know, they failed to adapt to change. And by 2003, their market share had diminished to a paltry 15%. Kodak actually developed, believe it or not, they developed the first digital camera, but worried about the effect going digital would have on the sale of the traditional camera film. Their failure to accept the change from film to digital had a massive impact on their profitability. It was easier to stick with what they knew than to adapt to change. Now, most of us carry a camera in our pockets, not necessarily by choice. It just comes with our phone, the phone that does everything. It's a camera as well. We can instantly upload photos onto social media. We can take video. We can do all sorts of things that have put out of business the traditional film, like what Kodak were relying on. And as an interesting thing I found out, Kodak actually released their first smartphone in 2017. Goodness me, have they missed the market opportunity there? Little too late, one would suggest. So here's another example. At the height of its success, Blockbuster had over 9,000 stores worldwide. And this is another story of a business that had the opportunity to change, but just didn't see the value in changing at the time. So in the year 2000, when Netflix was starting out effectively with what at the time was a mail DVD rental service, the CEO approached Blockbuster to discuss Netflix handling the Blockbuster's online business that they had at the time. However, according to Forbes, that CEO from Netflix was laughed out of the room. In 2004, Blockbuster finally set up their own mail DVD rental service. And when the CEO of Netflix mentioned that Blockbuster had thrown everything but the kitchen sink at Netflix in order to compete with them, Blockbuster sent the CEO a kitchen sink the next day. It was quite a funny article. Netflix now has over 150 million users. And the last time I checked, Blockbuster had one remaining store. Now, that may well have changed now. They may not have any left. But again, another interesting point. Another interesting example that illustrates that point of why, yes, it can be easy to stick with what we know and why change is hard, but why if we don't embrace change, that it can have disastrous effects. And in these cases, these are great examples of that. All right, so when we have a look at having the courage to change, we need to look at this particular example. Now, we can all agree that we all have inbuilt habits and behaviors that we repeat. Most of them subconsciously, we just do them. We also have so much going on in our lives that it's hard to keep, just hard to keep up with stuff. It's hard to accept that we need to do something different, or even just to do something different. So what we've got here is the formula for change. And what I find is that working with business owners, it helps to increase the ability to change. So on the right-hand side, we have an R. And this stands for resistance. This is what's stopping you and me and others from changing behavior. And this can come in three forms: no time, no money, or you just don't see the benefit of changing behavior. So what we need to do is to build up the left side of the equation so that these variables are greater than the resistance. So when we look at that, we start off with D, and that is dissatisfaction. And specifically, it's dissatisfaction with the status quo. It's dissatisfaction with the current situation. So this is where we need to understand the consequences of not changing behavior. What happens if you don't learn how to grow your business or improve your profitability? Profit may well drop. You might not be able to take that family holiday. You may not be able to retain all your team members. You may have to let some key people go. Then we have vision. What will your life look like if you do change your behavior? What do you want your business to look like in the future? What do you want your own life to look like in the future? Is it more holidays? Is it more money, more time with your family? Regardless of what it is, having a clear vision will help drive you to change your behavior. And finally, what are the first steps that you need to take in order to achieve that vision? So in this particular slide, we've depicted it with a lowercase f to represent that the fact that the steps are small and easy to take. Remember that the consequences of inaction will heighten your dissatisfaction and cause the business to regress. The fact that you're here today means that you're open to change, and that's a great step in the right direction. So the three essential tools I'm now going to lead into are those first steps. And the key first steps that you need to take to start moving forward towards the vision that you have or that you want to have of a positive future state. So as you can see from this formula, your resistance to change has to be outweighed by the dissatisfaction you currently have with the status quo. And your vision needs to be sufficiently powerful of that positive future state. Okay, so what are these three essential tools that I believe need to exist within within our business? First up, we've got our annual business plan. We also have our annual forecast, and we need to have ongoing reporting with accountability. The business plan is your guiding document to deliver the business outcomes you've dreamed of. The annual forecast shows the numbers you need to achieve so that you can get those desired business outcomes. And finally, the ongoing reporting with accountability means regularly monitoring your results and having someone hold you accountable for completing your actions and achieving your goals. Okay, so let's now take a closer look at each one. The business plan. Oh my God, is this a topic that often sees business owners' eyes glaze over? And to be absolutely fair, mine do too. But it's only when we think about the traditional business plan. And I'm going to debunk some of those, I guess, historical theories, maybe even myths around a business plan. You probably know there's thousands of books and articles on the internet about the components of a business plan. It's overwhelming. Here's what I consider to be best practice based on my experience with working with businesses for best part of 25 years. First up, we need to have a clear purpose. Why are we here? If you've read Simon Sinek's book about, start with why, this is exactly it. And very simply, this is a 5 to 7 word statement that explains why your business exists for your customers. Nice, short, sharp, succinct. Then we need a clearly articulated vision. What do you want your business to look like at a future point in time? Whether that's a year, 3 years, 5 years. Anything longer than that, in my view, is just, it's pointless. As COVID has probably shown us, X factors like that can throw things into a tailspin. So we don't need to go too far out. We need to make our purpose and our vision both practical, something that we believe in, and definitely something that is achievable within a realistic time frame. So yes, what do we want to achieve is our third point. What does our business need to deliver for you as the business owner? Such a critical point. Your business is there to serve you, not the other way around. The rider on a horse is in control of the horse, not the other way around. We need to make sure that we're in control of our business and pulling the reins rather than our business charging off and we're hanging on for dear life. So within our plan, we want to state the hours that we want to work, the holidays we want to take, how much money we want to make. And that leads into our next point, our high-level budget. This helps identify gross revenue targets for the year and is based on what you've recorded in the, let's say, the what we want to achieve component of the business plan. The budget also forms the basis for the essential tool number 2, which we'll come to shortly. How about KPIs or key performance indicators? These are the things that we want to be measuring so that we're sure that we're on track to achieve our goals. So as an example, what are our daily sales? What is our production for the month? What's our gross profit, or even the number of days team members are achieving their individual targets? Regardless of the KPI, set a limit on the number of KPIs that are essential. They're the levers, they're the key levers that you pull to drive your business. Maximum of 5, no more. We cannot be across dozens of KPIs. It just won't work. So we need to keep that succinct and look at the key drivers. Next, we need to look at opportunities and vulnerabilities. Your business plan needs to identify these so your goals can maximize the opportunities and mitigate the vulnerabilities. And next, we look at our goals for the year. These goals need to be measurable. They need to be achievable. They should cascade ideally into 90-day goals with clear actions and a person responsible for each action. If you've heard me talk on this before, I'm very much an advocate of having an annual plan broken into 4 quarters, a bit like an AFL football game and probably lots of other sports as well. They're broken into quarters. 90-day action plans make it far more likely that we're going to be achieving our goals. And even with that in place, it's super duper important that we review our business plan regularly to ensure the actions are being completed by the due date and that we update these 90-day plans on a regular basis. All that said, this business plan does not need to be pages and pages and pages long. So those are the rules that we need to follow when it comes to developing the business plan. First, we need to look at the key decision makers who should be involved and complete some pre-work before the planning session to reflect, prepare, and be heard. In our experience, using an independent facilitator helps to avoid people perhaps dominating discussions and encourages alignment between stakeholders and key team members. If it's done in-house, sometimes these conversations can be limited because we end up finding that it is really the person or persons driving the agenda that end up having an outcome that suits their agenda rather than the overall, what's best for the overall business. Now, as I said before, this does not need to be an epic that is pages and pages long. In our experience, one page, double-sided. There's no point to developing a 30, 50, 100-page business plan that ultimately ends up being a paperweight or possibly just gathers dust on the shelf or sits in the bottom drawer, never to be seen again. It needs to be visible at all times to guide decision-making. Absolutely critical. Share your plan with your team. Even if some of the sensitive information needs to be removed, fine. The point is that it encourages your team to buy into your vision and align their goals with yours. And from there, report against your plan monthly to monitor progress. Review, update your goals and actions every quarter so that ensures you're on track to achieve your annual goals. And do a full review and update your business plan every year. Some things such as vision and values don't necessarily need to change, but at least take the time to review and make sure that what you're doing in terms of the other components of your business plan are in alignment. All right, so let's have a look at building the one-page business plan. All the components are clearly identified. In our experience, we like to keep things simple, easy to read and to understand. We've got the purpose, the vision, what we want to achieve, and the values section at the top. Then we have our high-level budget. We update the year-to-date column each quarter to ensure that we're on track. Next, we have the KPIs we'll be measuring. You can see we've added targets to our KPIs so that we know what we're aiming for. Our ideal client and the value proposition are clearly identified. These should be shared with your team. Then we have our opportunities and our vulnerabilities. And then we've identified our most critical challenge. On the back page, we record our goals and our actions. First, we need to determine what are the annual goals. Then we break each of those into 90-day goals. Each of those goals should be a step towards achieving your annual goals. Then we work out the actions you must take in order to achieve those goals, and then recording who is responsible for each action and the due date that those actions need to be done by. We tend to recommend setting 3, 5 goals in a year. Again, succinct number of goals makes it a darn sight easier to try and achieve. If you have a list of 30 goals, that is an absolute disaster waiting to happen because we're just paralyzed by the amount of work we would have to do to achieve those. So 3 to 5 key goals for the year, because that ensures that they're achievable and you have time to focus on each goal. So there you go. That's the first tool, your annual business plan. And as you've seen, nice and succinct, one page, double-sided. All right. Now let's have a look at the annual forecast. In the past, you might have prepared a forecast because the bank asked for one. It's been just something that's being done somewhat of an ad hoc type basis. And when we look at forecasts, that's often associated with budgeting. Goodness me, that is also an eyes glaze over moment when we think about business plans. Budgets aren't too far behind. But again, it's because it's been stereotyped with those enormous documents, lines and lines and lines of text and numbers. And oh my God, it's all just too much. But bottom line is that we need to be looking at preparing a forecast every year. Because if we don't, we simply won't know how much money will be coming in and out of the business. And the ability for us to be making informed decisions is really compromised. We're just turning up every day and just hoping for the best. We just don't have a plan. Even if you've got a business that has positive cash flow, preparing a forecast should still happen. It just may well help you to unlock a lot of cash just by making a few small changes. And your annual forecast will break your high-level budget from your business plan into monthly targets, accounting for seasonality factors and allowing you to predict and prepare for large cash outflows. Okay, so what are the three forecasts? Typically a profit, loss, cash flow, balance sheet. What is generally referred to as a three-way forecast because of these three areas. The first forecast is for your profit and loss, which shows you whether you're going to make a profit or loss each month. It gives you the flexibility to allow for seasonal fluctuations instead of lumping all income and expenditure into one total. And it should show that while some months you might be making a loss, overall you'll be making a profit, or possibly vice versa. What's really important to understand is that profit and cash flow are not the same. Some costs don't appear on the profit and loss forecast. So you need to make sure that you're going to make sufficient profit to cover those additional cash costs. And that segues nicely into the cash flow forecast. This shows all movements of cash in and out of your business on a month-by-month basis, allows for things like tax payments, asset purchases, maybe even sales of assets, drawings, loan drawdowns, dividends, repayments of loans, and so forth. So while the profit and loss forecast shows you your business efficiency, the cash flow forecast shows whether you'll have enough cash to survive. And as we all know, cash is the oxygen of the business. The last forecast is the balance sheet forecast, which shows whether the overall value of your business, or say net worth, is increasing or decreasing. It measures assets, liabilities, and equity, or very simply, what you own, what you owe, and what's left. And following that logic, are you solvent or not? Highly profitable businesses can and do go broke. So the balance sheet forecast gives you an early warning for risk. As an example, you could have a huge increase in sales, but if you're slow in collecting your debtors, you could well be in a position where you can't pay your bills as they fall due. So as you can see, your forecast tells you a lot about the health of your business. And this is why it's one of the three essential tools and why you must do it annually rather than when the bank asks for it. Okay, so what are some of the rules to develop your annual forecast? There's plenty of software out there to help you create a forecast. And in a lot of cases, you may be able to come to the conclusions or use a lot of this stuff yourself. But in any case, our process, we send our clients pre-work to complete before they prepare their forecast to ensure they've identified all expected income and expenses. So first up, start with your desired profit, then work backwards to calculate the sales you need to obtain that profit. Compare it against last year's results. If your desired profit is realistic, then terrific. Is it achievable? If it's not, adjustments are required, or adjustments to expectations are required. Make sure that those figures are reviewed and adjust as you go. And as I've indicated, we can help develop your forecast and identify areas you can improve in terms of cash flow. All right, so ongoing reporting with accountability. This is our third essential tool. Reporting means regularly monitoring your results to ensure that you're on track to achieve your goals. So if you're not measuring your financial results and the key drivers of your business, there's no way that they will be able to be properly managed. Now, technology in this particular instance provides you with real-time data to support informed decision-making. As many of you know, I love what tools like Xero can do because they provide real-time information. It allows you to compare real-time data against your forecast and make adjustments if required to stay on track to ensure those goals that you've set are realistic, and they happen. As a general rule, we'd recommend preparing management reports monthly to measure your key performance indicators. If you wait until the end of the year to review your annual accounts, the data is just too old and it's not likely going to be of much use. So having more regular reports, it can help you to quickly respond to any unexpected changes in the results. And of course, without some accountability, you're less likely to take the actions you need in response to what those reports are telling you. People often start with great intentions, producing reports for the first couple of months, then they get busy with their day-to-day tasks. That's just life. Having someone to keep you accountable will ensure you can dedicate time to review your numbers and check that you've taken the actions that you need to. Accountability helps you to set aside time to work on your business, not just in, but on, and complete the actions you set in the business plan, or respond to your regular reports, building better habits for your business. Having someone keeping you accountable, they have to be independent. They must have the backbone to give you the consequences for inaction, but also the heart to care. They can't be afraid to upset you when you need a dose of accountability, or maybe a prescription for some concrete pills, as I like to call them, harden up. But at the same time, they also need to care, because at the end of the day, you set the goals you want to achieve. And if they're important enough, you'll be wanting to achieve them. And if you're not, you've got someone to keep you accountable. You must have clearly documented actions with due dates to ensure you have a deadline to work towards. And there's got to be consequences for inaction. If you keep failing to complete your actions, something's broken, and it's likely you have the wrong person holding you to account. So who's going to hold you accountable? Can I just say at this point, your spouse, whilst they absolutely have the heart to care, is probably the worst person to keep you accountable. Take it out of the private, personal environment and have someone who is outside of that space. We can't keep ourselves accountable, and our spouse is less likely to be able to keep us accountable either, certainly in a business sense. All right, what are your next steps? The main aim I've had today is to provide some I guess the message really is to provide the opportunity for you to make some positive change in your business. So what then are the next steps from here? I think we can agree that doing nothing is not an option. And as you've probably heard me say today, doing what you've done before is unlikely to give you a different result. So do the same thing, get the same result. Do the same thing, expect a different result, you'll go crazy. Make a clear plan that you can articulate with your team. Develop your forecast for the year and repeat this on an annual basis is best. Find someone to hold you accountable, not your spouse, someone who's independent. Focus on what you can do as opposed to worrying about what's out of your control. So relevant. The last few years through COVID, I think, has absolutely shown that, and it's just as relevant now. Focus on what you can do. Don't worry about stuff that's not in your control. And bottom line is that we're here to help. We want to help. We have the expertise to be able to assist you. We can keep you accountable to your goals whilst at the same time having the heart to care to make sure that what's important to you will in fact happen. So let's have a look at this a little further. As some options, we offer a business planning service, which typically is a 4-hour session where we'll develop a business plan like the one you saw earlier. Now, obviously that needs input from you, but we help you through that process. We can prepare the cash flow forecast. And for those of you who need accountability to make the changes to achieve your goals, we can do this through a quarterly coaching session where we update your 90-day goals and actions and hold you accountable to achieve them, or potentially monthly coaching if needed for those that need some more regular accountability. Changing the way you run your business is all about building better business habits. Make small changes which add up over time. So we have the Building the Better Habits worksheet, which we can send out to you as complimentary. And this will help you identify the one area, let's say, of your business that you'd like to continuously improve daily. And of course, we offer our 1-hour complimentary meeting to discuss your goals and find out how we may be able to work together to achieve them over time. If you're not ready to make any commitment for something bigger, that's a really good way to start the ball rolling. So as we look to wrap up today's session, I'd like to share this quote from you, or for you. Action is the foundational key to all success. Probably a fellow that knew a little bit about that. Commit to at least 3 actions you will take from the result of today's webinar and write them down. Don't keep them in your head. Put pen to paper. Give each one of them an owner and a completion date. And of course, if you need our support, we're here to help. Please reach out. So I really appreciate you being on the line today and investing some of your time. I really hope you've gathered some value out of this, the session today. There's plenty of other sessions that you can access on our website. And of course, if you need information, again, go to our website and please get in touch. Thanks again for joining, and we'll see you again.